and looking forward to a fantastic conversation with an amazing group of investors and folks that have been in this asset class now for many years. And so with that, I will like those that are participating to give a very brief introduction to themselves. Obviously, we will start with Maya, if that's all right. And then we will go down the row. Everyone just briefly, obviously mention who you are and then your role. And then we'll go into some fantastic questions that I think will give the folks that are listening some really great insight into this new asset class.
Yeah, sure. And just testing, can you hear me, David?
Yes, we can.
Great, good to be on. And I think my video hasn't started, so let me start my video as well. Here we go. It's good to see everybody, and it's such a pleasure to be here today, obviously, with Diginex platform. So my background, I'm a lawyer by trade. I've been in tech actually all my life, and started in payments in early 2000s in Africa and Latin America. Have been in both entrepreneurial roles and executive roles, and most kind of notably at General Electric, brought blockchain in early 2014 and 15, and have been involved heavily in crypto space and digital asset space. It's really 2009, 2010. I've been an investor and trader, and now obviously taken this new initiative with Diginex, and looking forward to this discussion.
Very good. Thank you, Maya. Owen, to you.
Sure. Thank you, David. So my name is Owen Lau. I am a executive director and senior analyst at Oppenheimer. I cover exchanges, informations, analytics, and also asset managers. So names like S&P Global, Moody's, MSCI, NASDAQ, ICE, and SIBO. And I also have interest and also have been doing work on cryptocurrency and digital assets and blockchain. And I have been with the firm for about 5 years. And my job is basically talk to public investors, in particular on equity side, and make buy-side hold recommendations. So I have a pretty good insight, or I hope I can add value to the today's conversation from a public investor perspective.
Absolutely. Thank you. And Owen, we're lucky to have you. Alon, to you.
Hey, thanks for having me. Thanks, David. Thanks for inviting me, Maya. You know, really excited to be here. My background is in financial technology. Over the past 10 plus years, built fintech platforms. So started in the crowdfunding space. And before that was actually when I was going to school in the systems architecture group at Countrywide. So I've seen the good, the bad, and the ugly of regulated or unregulated, you know, fundraisers and digital media. Before that, I was at MySpace. So what I do now is I invest in early stage blockchain companies with our fund, Draper, Goren, Holm, and we help accelerate and incubate very early stage startup companies in the space.
Fantastic. And David, lastly to you.
Hey guys, thank you for having me. Thank you, David. On my side, so I have a background in central banking and financial consulting. So I'm one of the co-founders of Keyrock as chief of strategy, and Keyrock is a digital asset market maker. So we've been around already for quite a few years. So we've been working on this for 4 years now, and we trade in all kind of environments. So hopefully I can help with anything related to really understanding the dynamics in the trading side of things and everything that happens between brokers, primes, exchanges, and traders.
Fantastic. As you can see, we have a spectrum of different folks that have been part of this ecosystem for a number of years in different ways. I want to remind everyone who's listening, if you do have questions, you can submit those and we will try to address them towards the end of this session. But with that, I'm going to jump in. The main idea and the session is around triggers of mass adoption of digital assets, specifically around institutional investors. And so my first question, and Maya, it's going to be to you, and this is the way we'll go, Maya, Owen, Alon, and David. What does mass adoption look like, and how would you define it today?
Yeah, if we're focused on, obviously it's very different, as everybody knows, institutions versus retail, right? Actually, as I look at the price this morning of Bitcoin, I don't see a retail adopting anytime until we get about 20. 20K is when people are going to start freaking out and saying, I'm losing an opportunity here, right? But I think on a serious note, retail currently is depending on the market, obviously, but I think globally has taken a little bit of a step back. Asia and US are a little bit different than everybody else, but I think there are a number of obstacles for this that are quite given, right? Lack of education, safety, custody, right? The UI on a lot of these platforms, ability for folks to understand, okay, once I hold this, what do I do with it? Is it really like gold, right? There are all of these questions. In terms of institutions, I think we are seeing a bit of what I call a schizophrenic behavior, right? On one side, they all want to learn. They're seeing a massive movement by regulators, by central banks, by companies such as ours, but they're also a bit confused. Do they build these things in-house, right? Such as digital wallets and custody, and do they go somewhere else? Do they partner? What does that actually mean in terms of security? How are their customers going to react to that? All right, there are all these existing questions. So I would probably compare this industry a little bit to a mining industry in 1980s, right? There was a lot of running around before it started to get kind of into buckets and people started feeling comfortable. In terms of scale on this, I think it's going to take a while for institutions to start flocking fast into this. I mean, there are certain things that I do see opportunities on prime brokerage, on derivatives that we're doing. But I think this is going to take a while.
Owen, as a public investor, and Maya, thank you for that. As a public investor, one of the things that you typically will do is relative value. You'll look at one company versus another, and you're trying to make a dissemination on what that actually, if that company can start taking market share from one company to the other. And people have tried to do that with Bitcoin as it relates to gold and other assets out there. In your opinion, what does mass adoption look like, and how would you define it?
Yeah, again, just like Maya, I don't have a definition per se, but I want to highlight maybe 3 things I am paying attention to. First of all, it's from a retail perspective. Can I use any type of digital currency to say, let's say I can use Bitcoin or any stable coin to go to Starbucks and buy a coffee? So that's one thing I look at. If I can do that, then my confidence level would increase. The second point is the regulatory framework. Because we don't want to see another Libra. So we want a good framework that governs the digital assets so that the politicians like it, regulators like it, and we're comfortable with it. The final perspective is from a public investor perspective, we want to see a tradable product. So now, like without naming any particular investments, we have some companies with a 100% exposure in Bitcoin and digital assets, right? Because in the past, when I talk to investors, they like to do more work on Bitcoin or blockchain or digital assets, but they can't find any tradable product. They may go into the private market and make some exposure, but it's not like tradable on an exchange. So that's why it's hard for them to get excited about. And I think that's another thing I'm looking at. Is there any tradable product that allows investors to get exposure into?
Very good. And we'll talk about this later, but obviously the news of PayPal and the efforts of Square on the public equity side and the public company side have been tremendous over the last few weeks. And we'll talk about what they're doing and how that's going to affect the overall market. But Alon, the question to you, what does mass adoption look like to you? Is it when every one of the 7.5 billion people on this planet own Bitcoin, or is there something else in your mind?
I think I look at, our focus is early stage startups in the space, right? So I'm not just looking at Bitcoin, but Bitcoin is obviously the best indicator for us, right? And Maya pointed out that we're at $16,000 Bitcoin today, and individuals aren't really quite seeing it yet. I'm conflicted, but I sit on Lunar Crush every single day and check out what media is saying and what people are saying about Bitcoin. And today, I just saw that less people are talking about Bitcoin, less media is talking about Bitcoin. It has to do partly with the election stuff, of course, than when Bitcoin was at the $9,000 price. So less people are talking about it today than they were months ago when it was at a major discount to today. So that's an indicator that people aren't waking up to it yet, and people aren't dealing with it yet. I categorize mass adoption in my mind when my mom starts talking about Bitcoin, when my family members who aren't in the space start participating in it. And I feel like we every couple years there's this spike and there's something where it's starting to happen, but we're not quite there yet. But I think we're getting there. I think that with Bitcoin, it's going to be driven by these institutions. Like everything else in technology, enterprise usually leads. You start using a computer at work, people start getting computers at home. You start using tools at work, you start using email at work, you start using email at home. And I think that's going to happen too. And it's just going to be the ease of use. When the Schwabs and the Fidelities make it so easy to one-click buy into some Bitcoin, which they're doing now, and these news cycles happen, it's going to happen. I think the next step, though, are apps and products that get you into the real benefits of the decentralized finance space without having to fully understand how to use Web3. And it's getting there. MetaMask is leading the way with us being able to participate in this stuff, but the easier it gets for consumers, the closer we're going to get to that. So we're getting there, but we're not quite there yet.
And that's a good segue, David. The question to you, one of the things that people have addressed or said in this ecosystem for a number of years is that mass adoption will happen when someone in South Dakota who has no experience with digital assets is able to do something vis-a-vis blockchain distributed decentralized architecture and find the benefits of that, but they have no idea that they're actually using it. David, what is your opinion on what mass adoption looks like and how would you define it?
Thank you very much. So, so far, very interesting opinions. When it comes down to the way that I look at it, indeed, there is the aspect of the actual inclusion of the asset inside a sound financial strategy. So let's call it, is the asset included into a portfolio that is considered sound? That is one aspect of it, which is purely financial. And there we're going to have access and use, and like you said, the capacity for the asset to be in Charles Schwab's and so on. And then there is the actual use of the value proposition of the products and services that are created with this technology. And that's where it comes in what you were just mentioning, which is the fact that both elements have complete separate level of adoption at the moment. We could actually argue that the level of adoption of Bitcoin as part of a sound portfolio is more developed than the use of the actual value proposition of the different DLT technologies without the actual need of the early adopter or the geek to really deeply understand the technology. We're not in that aspect yet. So focusing on the aspect of the actual portfolio, what is interesting is that if you look at any other type of asset class, there is a lot of understanding and the maturity of the asset just by understanding where does the price derives from. At the end of the day, there is plus or minus certain industry standards, industry metrics on how to value a certain type of asset. And what happens with this asset class is that for it to effectively be typically in any portfolio or any asset manager as something that is not strange, which is where I would perceive to be adoption, there also needs to be clarity on how do you consider and value that asset. If you would ask an investor why they bought a stock or why they short a stock, they say, okay, I have this methodology and this methodology is plus or minus understood by everybody why it makes or doesn't make sense. And I think we need to get there. There's already a lot of things going into how to value the asset class, but I think that's really the key, which is how can that be more standardized and people more to accept and see it as something normal, which is it has value, it's possible to understand that value and can be put into all kind of portfolios in a sound way for risk management or whatever reason is required.
Thank you, David. Very quickly from me, I think I share some of the sentiment of Alon that in terms of mass adoption, there was a point in time when we all didn't have email. And then all of a sudden, if you didn't have email, you were a dinosaur and you were left behind. There was a point in time, if you were running a business, you didn't have to have a website. You could have a brick and mortar establishment and you would not need to have a website. And then all of a sudden Wix came around in 2006, changed the game, made it easy. And then all of a sudden, if you didn't have a website and you were running a business, you were left in the dark. that is where we will start seeing this. And we are starting to see this happen now. The bricks and the shovels and all of those things have been building under the radar for the last few years. And all of this is coming about now in a very special time, especially during a very hard time for many of us around the world with COVID. But underneath that, tremendous building has been happening, which leads me to my next question. And we're going to start with Owen right now. So why now? Why are people like Stanley Druckenmiller going on CNBC and now admitting that he owns Bitcoin? Why are legendary investors like Bill Miller, the most legendary value investor with Legg Mason, now admitting that they're getting into Bitcoin and saying things like, if you are an institution, you better start really taking a look at this and talking about the supply and demand issues and all the things that are inherent within Bitcoin and digital assets? Why are corporations like MicroStrategy buying $425 million of Bitcoin for their treasury? And why is Square participating the same way? Why is it all happening now?
Yeah, I think those are pretty great questions. And the name you just mentioned, like Bill Miller and Porter Jones, and they're fantastic investors, legendary investors, right? So maybe a couple of points I want to make. Number one is diversification. So if you think about, you have $100, you can put $40 into equities and $50 into bond and $5 into private equity. And why don't you put $5 into Bitcoin to diversify your investment portfolio a little bit, right? Because we have seen the development of Bitcoin or some other digital currency, and we saw the return. So number one, diversification. Number two is people in this industry care a lot about outperformance and underperformance. If you saw the massive outperformance of Bitcoin, and if you allocate like 1% or 5%, that makes you outperform the market a little bit. I mean, it looks good. You can talk to investors and say, hey, my portfolio outperformed. But obviously, there are lots of things we have to think about, such as risk, such as how you are going to value this thing. And there are lots of questions out there that nobody can still answer. So I guess people look at these two things, diversification and also potential for outperformance.
Alon, the question to you, why now? Is it because of fiscal and monetary stimulus that has potentially created a path to debasement of fiat currencies around the world, especially here in the United States? Or is there something greater at bay?
I'm a long time since I was a kid punk rocker. So, for me, decentralized everything is just one step towards a brighter future. But I could talk out of both sides of my mouth in terms of institutional adoption, because as much as we were sort of fighting against institutional, today I think that we are exactly what you're saying is all of this printing of money, the monetary policy, everything that's happening behind the scenes is meant to it's very similar to where I started talking about being sort of decentralized everything and being sort of anti-establishment, but they are whether it's meant to or not, hurting everybody by trying to help everybody. The spirit of the law is different from what the letter of the law says. And I think that decentralized finance leads to the people having a bigger voice and the people being able to push back. So the creation of all of this money meant to stimulate the economy is, it probably helps those larger institutions more than it helps the people. And this is the people's bet on fighting back. I just hope that what's funny is again, talking out of both sides of my mouth, the institutions adopting it will make people feel more comfortable adopting it. And I think there's going to be some kind of cycle there. But definitely the way I think that across the world, especially with COVID, we're accelerating the adoption of all of this stuff because the monetary policy, the stimulus packages, the rumors of canceling all student debt and things like that. I truly believe, like, if I'm being totally honest, I truly believe that student debt is insane. The fact that universities and colleges are so expensive and that so many people have debt is insane, and it's not okay. And I think that schools should be as free or close to free as governments can make them or help their people be educated. But on the flip side, canceling a bunch of student debt and just printing money to give to banks, because they're not just gonna, you know, put the banks out of business. That wouldn't be really fair probably either. But at the end of the day, these rumors are what drives the price of Bitcoin and what's going to hurt everyone with hyperinflation in the next few years.
Right. Great answer, Alon. Thank you for that. David, the question to you: why now in this time are we seeing, you know, large investors, big corporations, public and private, adopting digital assets?
I guess I'll be with Owen on this one. I really think that it comes down to the more and more understanding of the fundamental value of the asset and the capacity for it to diversify our portfolio. I mean, it comes down to the fact that the portfolio diversification is widely accepted in the financial industry, and an asset that has a negative correlation is very attractive in that case. But Bitcoin, as a matter of fact, when it comes down to the fundamental, has one thing that it's very characteristic to the asset, which is that by definition, the fact that the asset exists through time makes it a stronger asset. So basically every day that passes, that Bitcoin exists, just the matter that it exists, and that proves that the set of incentives and mechanisms that builds it allow it to continue existing and survive, is what actually drives the reason behind the fundamental value. So somehow it's an asset that is very strange, because yes, it's negatively correlated, but as well, the fact that it's surviving so long, and every day and every year that it survives, it reinforces its own value proposition, which then at this point in time, after all these years, start to actually resonate into the understanding of the fundamental value by a lot of these investors, where it's undeniable that a lot of attacks have been attempted and it's still surviving. And every time it gets harder, because now mining is harder and so on. So it's an asset that basically time is playing on its favor every time to build the case for the fundamental value.
Right. And before I get to Maya, I just want to remind everyone, if you have questions, and there have been some already submitted, happy to address those towards the end of this session. And Maya, the question will be to you. Is it your opinion? My opinion is, and I would like you to either agree or rebut it, that the likes of Abigail Johnson over the last 5 years have paved the way. The likes of Cathie Wood, the likes of obviously Stan Druckenmiller now, and Bill Miller and Paul Tudor Jones, for the family offices out there that are listening, and for the institutional investors that are listening, the road has been paved, and it's been made okay to actually get into this now and take it seriously. Do you agree that that's why it's now, or is there something else at bay that's really making it a reason why large investors and corporations are taking a look at it now?
I'm not sure that I actually would agree with Owen that there is a bit of a look. These are smart people you're talking about, right? All this list that you said. These are people who are looking for that yield, right? And these are folks who are who know how to make money on speculative assets. So while I think diversification is part of that case, I actually think that if you dive deep on some of the research in Bitcoin, that hasn't been the reason why people have gone into Bitcoin. They've gone into Bitcoin purely for speculative investment, right? It makes the money. And if you see it over the last couple of years, as you know very well, David, it has made money to a lot of people. If you know how to use it, if you know how to trade it, if you know how to make money on it. Now, I think the last part of your question, why now? I'm not sure that it has much to do with COVID and printing money. I think at all, actually, I'll take an opposing view. I think it's just time. I've been in the space since 2009 and 10 when I bought my first Bitcoin. But when I look at, in the beginning, institutions in 14, 15, 16, right? I mean, you couldn't even talk to anybody in these institutions without them knowing how to separate Bitcoin from blockchain, right? Today, it's just a passage of time when people have had time to really understand this technology, understand that BTC is just an incredible project, incredible revolution. And I think with this time, we've also seen, I guess, just because of my background in payments, I've started in telecom payments, right? And started in traditional payments and moved into more programmable money. I mean, technology drives this innovation, and technology would drive transparency. And I think most people in these institutions are realizing that the system and the legacy system we have is going to be quite exposed in many different ways, and that DeFi market and cryptocurrencies like Bitcoin are providing a potentially can provide a massive transparency and an ability to transfer value in significant ways, which hasn't been disrupted at all, right? You talked about, somebody talked about email, right? I mean, our ways of transporting information has changed significantly, right? But our transfer of value hasn't. And I think most of these folks are realizing now that technology is able to do that for us. And you can literally program your money and program the way you transfer value. So I think it's a combination of these things, but I don't think that most of these institutions are going in. And actually there's empirical evidence out there to show that they're not going in to put money in Bitcoin because it's a great hedge because of COVID and printing money. I think it's just a speculative investment. It makes money, and that's it for right now.
We have about 15 more minutes, and then we're going to address some of the questions from the audience, which are fantastic already. I'm seeing them. And thank you for those that are submitting them. Please keep going. The question will be to you, Alon, and then we'll go around the table, the virtual table, if you will. So what do you think some of the key infrastructure improvements that we've seen over the last few years that have made it, a point in time where institutional investors, corporations are starting to really take heed of this asset class? Are there things, on-ramps and off-ramps? Are there pieces of infrastructure that have made it that much easier and taken away some of that friction that bring us into a place that is very special?
Absolutely. Owen was mentioning a good benchmark will be when we can all go to Starbucks and buy Starbucks with Bitcoin. We can right now through some intermediaries, but they're not really mainstream yet. And you mentioned earlier PayPal making their announcement. So I think that the institutions and the larger groups who can't goof around like us and experiment like us and decide, okay, I'm gonna add a new payment provider to my website and accept Bitcoin, right? Like they need to see a little more action. They need to see a little more tried and true security. They need to see more adoption to make it worth their time because they're a larger institution and it takes them longer and it's harder for them to deal with these things. They need to see what tax implications they have. All these things that need to be more clarified. But the products are being built and they're being tested right now. And you can go to Starbucks and buy it with Bitcoin, but I did it once because I wanted to test it, right? Like, cause I like goofing around with everything. But my friends from school who aren't techie nerds like me, who have some Bitcoin now, are still not doing it. One, they don't want to get rid of their Bitcoin ever. They want to accumulate and they don't want to sell. And two, it's just overcomplicated. We all have phones. We can go scan our phone at the kiosk at Starbucks, pay with our money, and walk out the door. So, but at the end of the day, all of these things are being built. They're built by startups. We have some in our portfolio, and I know you guys all have your favorites in the space that are building really, really cool technology. And the next step will be, I think, some either acquisitions of those companies from the larger institutions to start accepting Bitcoin, right? Maybe the best payment provider that accepts Bitcoin will be acquired by Starbucks. I mean, Starbucks is a financial institution at this point. They have, I think it's in the hundreds of millions of dollars in their Starbucks cards at this point. So, what's going to happen is, as people understand this technology, maybe it won't be adopting Bitcoin, maybe it'll be their own cryptocurrency or one of these CBDCs or whatever. At the end of the day, it's being built and people are getting more comfortable. If they're getting comfortable enough to make the recommendations on national television for the hedge funds for us to buy Bitcoin, it's just a matter of time. And if PayPal, with their at least internal risk assessments and feelings about the space, are willing to tell their customers buy Bitcoin and PayPal, and it looks like they're setting the stage for other tokens and things as well, and becoming almost like a Coinbase competitor. That's speculation. If that's happening and these rumors are occurring and all this stuff, it's just a matter of time. But it's being comfortable with the technology and feeling, I still to this day, maybe it's been 6 months or 9 months, whatever, since COVID, but I would take my kids to school, bump into some parent, tell them that I work in the crypto space, and have them tell me that Bitcoin's a scam, right? Right. It happens to all of us, right? Every single, if not every day, very, very often, maybe less often than a year ago, but it's happening. And that public perception has to change, because those people are the ones running the enterprises.
Very good. The question will be to you, Owen, from a public markets perspective, as you analyze companies that are starting to get into the space. As we mentioned, some of the ones that are out there, PayPal, MicroStrategy, Square, obviously. From your perspective, are some of the key infrastructure pieces things like Fidelity having a qualified custodian, or having other qualified custodians in the space now that make it, from a regulatory standpoint, more acceptable? What are some of the things that you're seeing from the public markets perspective that make this more flexible and more acceptable to publicly traded companies?
Yeah, I agree what Alon just mentioned about the infrastructure. Obviously, you mentioned Fidelity. They have been making a good progress in terms of building the infrastructure. But for me, from a public investor standpoint, I think the biggest delta is talent. So we at Oppenheimer have been organizing lots of blockchain and digital assets events. So I can tell you, in early days, when we talk to people, like when we talk to participants, many of them are, go back to the speculative point, many of them are kind of like Bitcoin miners. And if you talk about like 5 years ago or even 3 years ago, but right now, if you go to a conference, if I talk to the participants in our conference, they are just look at our panel, right? They are talented people coming from hedge funds, coming from financial services. So now we are seeing not just the people in early 20s and mining Bitcoin and make tons of money. Now we are seeing people from those industries moving into Bitcoin. But that's not just Bitcoin, by the way. It's the blockchain and also digital assets space. That's very important because they are industry experts and they understand the pain point of that industry, so that they can apply what it's good at Bitcoin, blockchain, or digital assets, and disrupt their industry they were in. So I think this is a critical development for me in the industry.
Right, and the question last week will be to mine. Then we're going to move to David on a different topic, and then we're going to take some questions. You know, obviously, Diginex came out. They're now, obviously, they went through a process where they are now public. They have Equos, which is also moving into the qualified custodian kind of arena, as well as some of the other players like Fidelity and Coinbase. Do you believe that this is actually the moment in time where we're having qualified custodians, when we're having regulated entities become publicly traded companies? Do you think that this is one of the pieces of infrastructure that was missing? And do you think it's going to lead to further adoption?
I think, look, can we push the adoption with that just by providing people security and by having people that understand this space talk about that and educate? Absolutely, because it's one of the most critical pieces of this infrastructure, right? Alon mentioned something really interesting earlier. He said, you know, when will I see that is when I see my mom adopted, right? I mean, my parents are already on there, maybe by nature because I've been in the space for a long time. But, and the only reason they don't question that is because they don't know the risk, because Coinbase is provided there in the US, so they have to use Coinbase. And Coinbase is provided a very straightforward usage of transferring your USD to crypto and vice versa. And they're in their 60s and they're managing to click through that, and it's fine, right? But I think once they understand the risk, that generation, nor do they read much about it, right? They're not reading to understand the risks. I understand the risk. Institutional investors, for sure. Hedge fund guys that you talked about earlier, all the traders out there, right? Smart folks that are getting involved absolutely understand the risk, and risk is real. Can we, through DigiVault and through other companies that are in a similar space, provide that security? Absolutely. Do I think that institutions might be building this on their own if there's going to be larger adoption? For sure. So I think we're going to see a lot of that. Absolutely.
Great. And David, as I promised, and we'll go around the table again, we're not just in Bitcoin. You know, there is not just Bitcoin, and that's not the entire show. what we have seen is an emergence of other digital assets that have become mature, that are starting to have governance features that are becoming truly decentralized and distributed, that are using new forms of, as I mentioned, governance, and that are actually taking shape and that are actually becoming something that you can do fundamental analysis on, much like Owen would do on a publicly traded company. One of those spaces and one of those sectors, and I use the word sector very specifically, is because we are seeing a taxonomy in digital assets now, where you have Bitcoin as a cryptocurrency, and then you have other subsectors like gaming, like scaling solutions, many other different pieces of that. Do you think that decentralized finance, what's happened this year with decentralized finance, which was effectively the use of blockchain technology for the new revolution of lending, borrowing, and collateralization, do you think that that's a moment in time this year when we've seen that really grow, that's going to lead to further mass interest in this space?
So, I mean, when it comes down to the DeFi movement, indeed, it's undeniable that there's a lot of momentum on it, but it is quite important to split and try to understand what is really happening there, because the thing is that we have the actually addition of new value propositions through the creation of these new products and services. And then we have a speculative movement, which has been created just by a very ingenious set of incentives that have been attached to these protocols. The set of incentives and systems to basically compensate for the early adopter to integrate and use these platforms is per se something that is not completely sustainable in the long term, and it does help for the creation of the adoption. But when it comes down to it, a lot of these incentive mechanisms are not actually completely related to it being a DeFi or not. Like, they could be as well widely implemented into a centralized like system. I mean, you could take a centralized exchange that realizes that the incentive mechanisms of these platforms make sense, and actually create technology that is attached to a centralized order book or centralized exchange or centralized lending platform, and then make a central entity that pays out some sort of oracle to the people that contribute towards that liquidity pool, for example. So the point is that, I mean, and it is already happening. You look at some of the things that Binance is doing, they're actually basically copying some of the good innovations from the DeFi space and making them back into a centralized type of format, which really puts the question on, is it DeFi what is actually adding the value, or is it the set of very ingenious mechanisms that have allowed to do that? Now, what is interesting, going back to the part of adoption, is that when you look at what's important for an institution to be able to enter into the industry and what is the value proposition that you will propose to them, when it comes down to DeFi, there is actually a very strong value proposition, and it's the concept of basically central point of execution. So imagine in a traditional finance or in any sort of financial gimmick that you want to do, you want to optimize your capital, meaning that you want to centralize your capital in one location and be able to do a lot of things with that capital at the same time as collateral, for example. Ideally, that is represented in the concept of prime brokerage. So a prime broker will be able to hold your capital, put it on the back, and then ideally you'll be able to execute among multiple exchanges, multiple venues, lend capital, whatever it is. Well, the very interesting part of DeFi, what people don't realize, is that by definition, the whole ecosystem is like a prime broker, because in the way that it's going, we're going to end up getting to a point where you have one wallet, you deposit all your capital there, and if you're smart, you can actually use that to cross across any type of financial service, except that now, every time there's a new financial service that gets created, it automatically pops up in your prime broker. So there is a underlying very strong value proposition for institutions to use this, which is capital efficiency. But I believe that has not been exploited yet, as a matter of fact. As a matter of fact, the reason that it's been working today is more because of the set of incentives and mechanisms that are around it that are pricing people for putting money into this.
Right.
But I do think that if it goes in that direction and institutions realize this, it's going to make sense from a purely value proposition point of view to use it.
Right.
Can I?
And this is actually a question, and Alon, I'm going to get to you on this one. This was actually a question that was submitted from the audience, which leads into this question that we're talking about in terms of a stratification, a taxonomy, if you will, of digital assets. The question was more specifically, would there be another Bitcoin in the future? A question that I've yielded many times from institutional investors and family offices, because obviously it is open source and because obviously we've seen forks of Bitcoin in the past. But as we get specific to decentralized finance, because that has grown dramatically this year, going from $830 million of capital that has been locked in some of these different platforms at the end of April to over $12 billion, it has become a force and something that has been now even recognized by Bloomberg, speaking about one of the preeminent pieces of decentralized finance called Uniswap. And that was actually mentioned by Bloomberg about 2 weeks ago. So the question to you, obviously from a venture perspective, and we have about 10 minutes to kind of flush out a few more questions, but is DeFi something that over the course of the year has caused more interest in this asset class? And what do we think that some of the learnings have been thus far from DeFi?
I was getting very excited at what David is saying because it perfectly leads into where you just went. So you know, 12 billion locked in DeFi is huge, especially considering the growth from, you know, just 6-9 months ago. And you're absolutely right. It is becoming a force, but we also have to remember that alternative investments, and this is an old number, so it's, I think, likely higher now, especially now actually, but in the United States alone, the alternative investment market is somewhere around, it's higher than this, $7 trillion a year invested in alternative investments, institutions, and all of those things combined. So you know, the $12 billion is amazing for us in this industry because it's so early and it's growing, but it is, you know, institutions are looking at this and it's cute to them, right? But what David is saying, all of this hype and all of this craziness, these 1000% APRs that we're seeing on these ridiculous products and things like that, are showing us mechanisms, are creating mechanisms, incentive schemes that are, you know, on one hand, very, very, very innovative from a technology standpoint, making it easy to transact and do things that we couldn't do before. But on the other hand, it's a throwback to community banking and why banking even started in communities in the first place. It's like if Wells Fargo decided to give you a share of Wells Fargo stock for every dollar you put in, for every dollar you lend from them or loan to them by making a deposit. So it's not like the most innovative idea at a high level, but the fact that we can actually do it and do it quickly and do it easily is the exciting part. And of course, there's going to be some regulatory concerns, but I think that where this is really going to go is the talking about prime brokerages. And I'm trying to be fast, but I talk too much. So Prime DAO, for example, is launching next week, one of our portfolio companies, full disclosure. But the idea behind what they're doing is taking the more responsible approach to DeFi. You know, creating a rating system similar to what prime brokers do in the traditional space to help you understand, has this been, what the various economic aspects, which is normal for prime brokerages, but there's an extra level that DeFi has to have. Have the contracts been verified? Have they been audited? Has there been proper security done on this protocol? Have you tested it? So all of these things, and then creating liquidity across all of these platforms. Because if you go onto Uniswap, you get one price. If you go on to Balancer, you get another price. You go to a centralized exchange, you get another price. And more, there's DEX aggregators, but they're not necessarily doing it right and doing it in the best way. So anyway, there are products sort of taking what David just discussed, bringing it to the next level, making it more institutional friendly, even in a decentralized manner, so everyone across the globe can participate. So it's really exciting. And for your first little initial inkling, will Bitcoin be replaced? I don't know. I don't think so. I think that there's going to just be more assets. But you never know. I'm a big fan of Bitcoin, obviously, but I focus on early stage startups.
Right. My other question to you.
I was going to say, can I just jump in? But thanks for picking. So I think this is really interesting, and this could be just a session on its own, right? But I actually think the rapid experimentation that happens in DeFi is what gets me so excited. I have been in innovation all my life, and when I see this, this is a whole different level, right? And goes back to the point I mentioned earlier, why I think institutions and family offices and anybody else that is looking at this should be really paying attention, is because legacy systems are changing and they're going to change. And if you look at rapid experimentation with the new financial products, right, and with less friction, I mean, this is what we're looking at here. And so you're looking at democratization of access. It has affected so many people out there. Sure, granted, might not be the age group of the folks that run these institutions, but it's definitely millions of people around the world. And so I think that before these services are actually useful, right, to an average person, we're talking about utility and usability of these things versus like making money. I still go back to my point that this is definitely more of an arbitrage and speculation play, and you can make a lot of money on DeFi doing that versus the actual current utility. Now, I have also in my position at General Electric as a CIO experimented tons with smart contracts. And the one thing that we do forget is the IoT and the AI using smart contracts, right, to be doing this. And this is a huge opportunity to it, which again, it's a completely different topic, but people forget that there is a utility to this thing.
Right. And for those that obviously some of the terminology that we're using right now, smart contracts, DEXs, might sound Greek to you. We understand that. We appreciate that. Please reach out to all of us, obviously. It is not Greek. There are obviously ways to understand this. A lot of this is just new innovation that we're calling things the way they are, but feel free, obviously, to reach out to all of us if you have questions specifically to some of the names and some of the things that we're discussing, because I know they can be a little, as I said, Greek. The last question, we have 4 minutes left. And of course, if anyone has any last minute questions, please obviously submit them. But the last question, and one that we formulated about a week and a half ago, is with a new presidency, and someone from the audience actually asked this as well too. Whether or not this is not a political discussion, but it appears obviously that President-elect Biden will be taking office next in January of 2021. Will he and that administration be positive or negative for digital assets? And we will throw that to Owen right now. And please, Owen, try to keep your answers brief because we have about 3 minutes left.
Sure. Thanks, David. So I think a new president is important, but for me, I would put more emphasis on the development in Congress, because right now it's still looks like it's a little bit still divided in Congress. But overall, I think our lawmakers have a good understanding about the value proposition of digital assets. And I think the key thing is it just takes time to develop and to come up with a good legislative and regulatory framework. But overall, I'm positive on the kind of the development of the digital assets. And I think if we can make a case that it creates value for the society, I think we can get there.
David, the question to you, and try to, if you could, keep your answer brief.
I must say on this one, I think I'm not an American, so I gotta not have an opinion.
Very good.
Is it good for adoption or good for the price? I think it's great for adoption. I think it's going to create price volatility, but I think that no matter who would have won, Congress seems to either be lying or not understand what crypto is. And so one of those two things are true, and it's only going to help. Every time they say it should be, it should be criminalized or some ridiculous thing like that, the price goes up and adoption occurs because people are talking about it more. So, whatever they do, it's you can't unring this bell.
I think it's actually very good. If you look at Gary Gensler, who's been appointed as the lead financial policy, right, on the team, he's not a Bitcoin bull, but he's definitely an intellectual guy. And so he's definitely interested in the underlying technology of BTC and how it will benefit the financial system and in which way the government can use it. There's no doubt that it doesn't matter which administration, to Alon's point, I think we're moving towards that technology progression. Yes, politics is always slow for various reasons, for the right or wrongs, right? For protection of the larger class of society. But I think in this case with Gary, who is a true intellectual, who will ask questions about, who wants to understand, there's already been efforts of reaching out to people to get education in the government. So I actually think it's a great thing.
Excellent, Maya.
David.
And
oh yeah,
I wanted to.
I just wanted to quickly. I know we're running out of time, but David,
Yes.
this is one I'd love to get your opinion on. If you can, I know you're playing moderator, and would love to.
Very briefly, I think what we're seeing right now, and I think one of the things that was, again, under the radar that the news and the media were not necessarily reporting on, especially from our asset class, was the appointment of Brian Brooks to head up the OCC. Brian came from Coinbase as chief legal officer, has been in that role now for about 5 months. And one of the first things he did was to send a letter to all federally regulated banks within the United States to tell them to get their houses in order to start custody of digital assets. I think those types of appointments and those types of people within our political body are going to be incredibly important. But I'm also concerned that Congresswoman from Michigan wrote a letter with other people within that same body who are concerned about Brian Brooks's letter and potential overstep. So I believe that there's still much to educate. I believe obviously Gary Gensler is going to be a very important figure of that. But education at the end of the day is something that will obviously continue on. Obviously the people that are on this body right now and this panel are doing what they can. We are in a place right now where we have never been, where institutional adoption of digital assets is come leaps and bounds, where we're seeing the most prominent investors in our time start to acknowledge the importance of digital assets, especially Bitcoin, as a way to potentially protect themselves against inflation. This is a time we have never seen before, especially in the last 5 to 6 years. And so it's an incredibly important moment in time, but the work that we all have to do, the work that Diginex is doing, and everyone else on this panel is incredibly important. And I think over the course of the next 5 to 10, 15 years, we'll see people understanding the benefits of distributed and decentralized technologies and assets as we continue to mature as a society. So I want to thank Diginex, everyone there for putting this panel together and for letting us all talk about the different things that we're talking about today.